Actually, Shweta, the brother also joins in with her perspective. And Shweta, would you also concur with that? You know, there's no surprise or shock in these numbers, and I think the market, which is why the stock is also down about 1% in a quarter and still trying to find its base. I would agree with Poonam. You know, there may be a marginal miss of about 100 crores on the bottom line and maybe 400 crores on the top line, but you would say that these numbers are within the range expected, and you know, so you would call them as in line. And even on the gross NPA, net NPA front, 20 basis points quarter-on-quarter uptick, would you read that into as a lot?
Yes, I agree to the extent that because management had already guided slippages to remain little elevated at least for Q2 and Q3. So 7.1% GNPA number is very much what we had also expected. Secondly, on the profitability, tad lower than our estimates, considering the provisions have stood little on the higher side. But again, PCR at 62% plus is still providing comfort. So all in all, yes, the GNPA absolute numbers has gone up, but in line, however, which was very much on expected lines, and slippages at least by FY17 end should continue to look tad higher.
Right. Mayuresh, this question in fact comes to you, and I just got the provision coverage number also, and Shweta was just discussing in terms of the overall provisions as well. So the provision cover in fact has slightly improved to 62.1% versus the 61.6% in the last quarter, and we are seeing stable provisions, more or less stable provisions on a quarter-on-quarter basis, which stand at 78 or 7,900 crore versus the 7,400 crore in the last quarter. So just looking at these two numbers, and of course we already discussed the entire absolute GNPA numbers. What is your first take in terms of the asset quality here for SBI? Mayuresh?
So largely again, I think if you read in percentage terms, 7.1 if I'm not mistaken, is that the figure for them?
1.4 versus 6.94 in the last quarter in terms of the percentage terms.
Right. So I think 7.1, I think I'll not read it as being a huge amount of miss, because the management had indicated that it will be on the higher side. Again, largely if you look at the PCR has inched up a tad bit, but one must really understand the dynamics in terms of the watch list as well as the structured book for the bank. And if I do a simple comparison check with the larger private sector bank, it still appears quite reasonable considering its loan book and the asset book size. So again, I think not reading too much into these numbers. Again, management commentary here will be extremely pertinent in terms of how FY18 will pan out for the bank, both in terms of credit costs, the credit growth, as well as the advances going forward.
Right. In fact, Lalitabh, let me just come to you. What do you make of the entire net interest income itself? We're seeing slight miss in terms of our own poll in terms of the net interest income. It stands at 14,438 crore versus the 14,800 crore as per our own poll estimates. What do you make of the entire net interest income out there? Do you see that the margin pressure probably is still continuing for State Bank of India? Because we did see good amount of margin pressure coming in the last quarter itself, and our poll was also suggesting that maybe even in this quarter probably there is some amount of margin pressure left, because the bank recently had cut their interest rates on both the lending as well as the deposit front. Lalita?
Yeah, see, first of all, we have to admit that State Bank of India is the market maker in terms of interest rates in the country, more or less, because of its size. And in my sense, you know, analyst expectations are at best an approximation of what they see. 400 or 800 crores hit or miss up and down on a size of 14,000 crores, I think is we should not be taking that against that. I think to my understanding, I think there can be, you know, some amount of yield pressures that might have come during the quarter, because we have seen, you know, most of the banks bringing down their base rate during the quarter also. But I will not read too much into that. There is a very limited amount that you can read from you know, the PNL amount, PNL numbers as of now, the headline numbers. I believe the asset quality and the way forward, as the management sees, would be a more important thing and a better guidance for the bank going forward. as of now, I am happy that they have been able to maintain 62% PCR, and despite all things said and done, despite everything, a slight 30 or 40 basis points increase in gross NPA does not seems to be ringing alarm bells for me, at least as of now.
That's absolutely right, Shrikant. In fact, the size that State Bank of India has, with the deposit base itself of nearly around 18 lakh crore, and with the entire demonetization coming in there, we probably should be seeing the largest Bank of India increasingly, humongously in terms of the entire CASA deposit and also in terms of the deposit growth. But of course, the entire asset quality picture in terms of the corporate stress, the SR Steel account, the impact of those, the details of the granularity of the asset quality, we will of course watch out for the management comment on that. But Shilpa, let me just come to you in terms of the entire consolidated book. If I do recall, the entire associate bank numbers on the gross NPA has been pretty much high. All the associate banks in fact have declared a lot of NPAs during the last few quarters, and that is continuing. On the entire book front, it is staring at a 1.1x FY18 price to book. Shilpa, what do you expect in terms of the consolidated, Shweta, what do you expect in terms of the entire consolidated book? How do you see that entire book to look like in terms of overall valuations and in terms of the asset quality now?
Yeah, actually, associate banks add almost 18% to the overall consol profitability of State Bank, and the watch list looked tad higher in last particular quarter as far as associate banks were concerned. If I'm correct, the number was somewhere around 120 billion. Even the restructured assets stood almost 6% of the overall advances, which is tad worrisome. So we would actually wait and watch as to how that watch list emerging from associate banks would actually turn out to be. However, Q2 as well as Q3 would see tad pressures. I think the end of December we would see associate banks asset quality pressures to actually start receding. So starting Q4 of this particular financial year, we actually believe synergy benefits besides asset quality pressures should actually start working positively for State Bank. So as of now, we await the details. However, yes, little asset quality pressures, especially because 6% of restructured assets belonging to associate banks of overall advances is tad higher number.
Okay, I just want to mark what they've done on advances and deposits, and Mayuresh, you could perhaps quickly sum up your view on the stock. Advances growth of 7%, I think the expectation there was 10 to 12%. So, there's been some underperformance there too. Deposit growth, of course, has been healthy and is expected to be healthy, because of the black money clampdown. But your summary on what the stock does from here in lieu of this earnings report?
No, actually, again, I think with the advanced figures that you just mentioned, Sanjeev, I think that bit below expectations, and the management had laid out for 11-12% advanced growth for the better part of FY17. But again, I think the management is being very, very cautious in terms of its lending book. Largely, again, on the asset quality front, not reading too much, as I said earlier. I think a 7.1% kind of a figure in terms of the NPAs, I think not too alarming at this point of time. The PCR has been and again, not too alarming. Yes, I think the associate banks performance and the merger thereof will be awaited.
Right.
Again, I think the bank is fairly valued in our opinion at this point of time. Management commentary will proceed.
Right, management commentary awaited, but the bank is fairly valued. But I think that advances picture looks quite grim. The stock is down 2.5% as we speak. Lalita, Shweta, Mayuresh, thanks very much for joining us and giving us a 360-degree perspective of SBI's earnings. Aside of the asset quality performance, I think it's really about the advances growth, which startled me at least, below average from what the street was expecting. We'll take a short break then, but when we come back, more on the markets.